Good day to one and all. This is Dr. Sivaraman of iknowindices.com. We are on 20th of January between 5 and 5:30 GMT. I will recall what I explained it during my Asian session live market analysis and the forecast webinar, which I gave it on 16th of January, that is Monday. So today we are on Friday. So during this particular week, whether the market has moved in line with the forecast expectations, and also what was the range in which the market was making the moves. So all those analysis and the review, we will try to do it in order to understand the dependability of the forecast. So if you have got any doubt and if you want further clarifications, you can always contact me through email, dr@i-knowindices.com, or my Skype chat ID, iknowindices@hotmail.com, to get a live reply. Then my website address is given here. If you want to get more information about the trading system, you can visit the website. So there are three components which are essential in order to understand the trading strategies of mine, namely the derived forecast, which gives the overall trend in the market for the day, for the week, and also for the month. And I split it into session-wise forecast and given it on Monday. And every Friday I review it and find out how the market is moving in tandem with the forecast expectations. And we do the market reading. In the event if the market moves against that of the expectations of the forecast, then we need to have the market reading technique in order to fine-tune the forecast and also understand the market has deviated from the expectations, so that we will apply the trading strategy so that we will consistently earn money from the market. We follow the forecast and take the positions. In the event if the market moves against that of the expectations, we use the trading strategy and try to effectively earn money from that of every trade we do. So that is a basic idea, so that we need not depend on any of the fundamentals or technicals. We can straight away focus only on the market using the live market code page. Now this is the forecast sheet what I have given it on Monday, 16th of January. We are on 20th. As I explained, that they are expected to make very volatile move during that of the yearly trend reversal time. The month of December and the month of January, the players used to do the yearly trend reversal moves. As a result, they try to offload the positions by October, November, and then try to bring in volatile move, create uncertainty to the traders, and induce them to liquidate the long positions. And then they create all the hypes stating that the other majors could go in for an extreme level, or US dollar is going to be the king forever. And that sort of feel they create the market and induce the market sentiment. And then finally, when the traders liquidate their long positions in distress, the players accumulate the position and book against their profit. Then subsequently in the month of January, they continue to make downward move, create the feel that the market may not have any bottom and it may have a free fall. Then the traders will think that sell and buy is the ideal trade to do during this particular time frame. Then they do it for about 2 weeks on the downside, and then start accumulating the buy positions at the lowest level and start gaining the levels from the third week. And then they bring in the conclusion of the yearly trend reversal. Then subsequently by end of the month again, they will bring in the monthly trend reversal move, the last week of January, and then subsequently they will make the trending move for more months. So here, as I explained, that Monday they made the slide, and then Tuesday and Wednesday they just gained the levels in the case of Euro and GBP in line with the expectations. And Thursday, yesterday, they gained the level, and after the ECB press conference, they made the slide and again started gaining the levels. And now they are expected to make small sideways move on the slide. and then start gaining the levels during that of the European and the US session. And you know that the president oath taking is going to happen today, and for that they will create a euphoric move on the upside in the case of other majors. But still, they will bring in the volatile moves to create the uncertainty and then start making the gain. At that time, you could come across that the contrarian moves happen in all the majors. Euro and GBP might slowly gain the level, and USDN might aggressively gain level. That way, they will make in the USD and the USD gaining move. In the Euro and GBP, they could make the USD weakening move. So that sort of moves they are expected to make during this particular course of this particular during this day, and the weekend moves could be of initial volatile and then subsequently more gaining moves. With regard to the levels in which they are expected to make the moves, Euro came down to 1.0580 and then started gaining to 1.0719, and now they are holding in the middle level. Then in the case of GBP, on Monday, as I explained, that they are expected to make all week beginning false moves, telling that GBP could melt down because of British exit and things like that. And after the speech of the Prime Minister, they started gaining the levels, giving some attributes and start making the slide again. So this is how they try to make the moves in the market. One need to understand that people might think that the fundamentals are driving the market, but it is not all the time. The players pretend as if the market is following the fundamentals or technical, and then simply reverse the market and telling that it is due to some other factor. That is why those who take the positions following technicals and fundamentals, if they fail to exit or if they fail to keep stop at entry in a profit-making position, they may again end up in making loss. Then in the case of yen, it came down to 112.57, about 100 pips below than that of the expectations, and started gaining the level. And today, during that of the US session, they could make further gains. And in the case of USD CHF, they just came 3 pips below that of the parity and then started gaining the levels. Now it is in the middle level. And in the case of Canadian dollar, it came down to 1.3019 and 50 was the expected low, and then it has gone to 1.33. Then Australian dollar, it came down to 74.59 and started gaining the level. So in all, you find in line with it of the expectations of the levels, the market has made the moves. And also I gave you the trend that they will initially make the dip on Monday and then start gaining the levels on Tuesday and Wednesday, and then make the slide on Thursday and then start gaining the level on Friday. So this is how they are expected to make the moves in the case of Euro and GBP. And in the case of USDN and USD CHF, they are expected to make the contrarian move at times, and also the USD gaining or the weakening move in line with that of Euro and GBP. Now we will do the market reading using the initial lows and the highs, what I noted down around 3:30 GMT, in order to fine tune the forecast and to also find whether they are going to move the market in line with the forecast expectations. Euro formed 1.0652 as the low, 1.0687 was the high. They breached the high and went up to 94 and came below the initial high. So they made a brief upward stop and to make a slide and then come down closer to the level or make a brief downward stop and then start gaining the level. Because during that of the Japanese session, they are expected to make the swing and slide. And from that of European session, they are expected to make the swing and rise moves. In the case of GBP, 1.2330 is the low, 1.2370 is the high. It went up to 72, just a brief upward stop and come closer to the low. Then in the case of yen, 114.56 was the initial low. They just made a 2-pip downward stop and start gaining the level, and they are in the middle level now. They are expected to make slowly an upward move during the course of the day. In the case of CHF, 1.0040 was the initial low. They just breached it by about 4 pips and come above the top of that as a brief stop in, and then 1.0071 is a high they are likely to breach and go above. And when Euro and GBP are gaining the levels nominally, they could gain more levels in the case of USD, Yen and USD CHF during the day. In Canadian dollar, 1.3285 was the low and 1.3331 is the high. They have not breached the low or the high. And Australian dollar, 0.7553 is the low. 0.7588 is the high. They have not breached the low or the high. So, which indicates that the commodity pairs they are going to hold without breaching the low or the high. The majors they are going to bring in the moves, and mostly now they are making the USD weakening move. Slowly they could change it to that of the contrarian move on the downside as well as on the upside for the weekend. Sharon has got a question. Is USD Yen rise today above yesterday's high? Yes, it is expected to rise to 115 and above. Then this is the recommended trade. So when they are making a brief downward stop and near that of the low 1.0650, you can take a buy, and they could gain about 50 to 75 pips from there. You can keep the exit limit and also keep the hedge ordered or sell stop to limit the risk. And in the event if it is not hedged and the position makes profit, we can keep stop at entry and remove the hedge order, and then trail the stock 15 pips away from the market and try to maximize the profit. Keep the exit limit at the recommended level, so that market could either hit a trailing stop or that of the take profit order, so that your profit is being protected. Similarly, in the case of GBP, they could come down to the low 1.2330 and slightly lower, and you can watch and take the position during the late Japanese session or early part of the gap time or early part of the European session. When they are making small contrarian move and swings, you can take a buy. Then later on, they are expected to gain the levels. Then in the case of Yen again, they are expected to make a downward stop and below that of the low. You just watch whether they are doing it or they straight away gain the level. So you have to watch and take the position, but not near that of the high. When they are coming to that of the low during that of the late Japanese or the early part of the European session, you can take a buy, and later on you can hold, and they will be able to give a nice profit in your yen position. Then these are all the market timings. So the market is divided into 24 hours market is divided into Japanese, European, and the US sessions, and each session is further subdivided into early, mid, and the late sessions. And in between the sessions, you come across the gap times. And during the gap time, they make the false move or the quick moves in order to confuse the traders. And the opposite move will be seen during the early part of the next session. So by reading it, we'll be able to find what sort of move they are going to do it during the early session. And then accordingly, you can take position and close during that of the late session as a session-wise trade. Always take a position, a currency wherein the spread is more than 40 pips between the high and the low, and those currencies they handle at a given time. So that will help you to make quick profit. Instead of a currency wherein the spread between the high and the low is very narrow, you commit a position, you could hold it for a longer duration, and that may test your patience. So if you've got any doubt, you can ask me. Okay. What is this breach means? It tends to go against. Breach means Suppose euro low is 1.0652 and it comes to 1.0648 and goes up. Then it breaches the low, the initial low, comes below and then start going upward. That is called breaching the level. Hope you are able to understand. Because the initial lows and the highs act as the protective level and the day range, and then subsequently they go below that of the initial low or go above that of the initial high and then reverse, and that is referred as breaching, or cut the low or cut the high you can use. These are all now some of the terminologies you use in the markets. In trend, during the gap time, or all of the pairs are handled each time, or just two major pairs. Also, what is the reason that Sunday's open gap a good amount of pips? Okay, as far as the gap time moves are concerned, the players make moves based on the purpose. Just like that, they don't make the move. Wherever the traders have got unfavorable positions in plenty, then they make such quick moves during the gap time to hit the stops. Suppose in the case of euro, a lot of people have taken the long positions before the start of the European session, and also many of the traders, once euro has breached the high, initial high, and then stays close to the high, then many traders would have gone for a breakout trade. What they do is they take a buy around 1.0690 and keep stop below that of the low 1.0650, so that in the breakout trade they'll be able to easily book profit when it breaks the high and goes above. What the players do, they just breach the high or break the high and come below that like this as a brief upward stop and. So we have to understand the difference between a stop and an extended move and the intentional move. Stop and the extended moves or quick moves, during that you find that they breach the high and comes below, but during that of the stop and in less than 30 minutes it comes below that of the initial high, but during the extended move they stay above that of the initial high but do not breach the new high for 2 hours and then start coming down. That is extended move, and that is mainly to create the sentiment. They hold it for 2 hours. And intentional move, every 30 minutes the new high what they have found they breach. Hope you are able to understand how you can differentiate the move, and the intentional move will be slow, pip by pip move. So when they make such moves, you can understand what sort of trade you can do it, whether you can buy as a breakout trade or sell as a counter trade. Then coming to the gap time move, see, we are of the opinion that once the market closes around a specific level, it is supposed to open at the same level. What the players do it during that of the weekend, there would have some events happened or some sentiment would have been created. Then afterwards, what they do is, only if there is a necessity, when there are a lot of people holding the unfavorable position in the market, then they go in for a gap opening. And many people think that the gap will be filled, etc. It is not mandatory, because the players are here to make money and they don't do as a thumb rule that we have to fill the gap and things like that. These are all our assumptions. So logical assumptions, what we do is, whenever the market makes a specific move, immediately we think that a similar move should happen next time again. So this is what we try to find it as a correlation. So when anything happens to a particular currency, we assume that it could happen to that other currency. And there are many people who go in for such coincidences and say that when Dow Jones goes up, Euro also goes up, or when Dow Jones goes up, USDN also goes up. That is how they try to correlate, just looking into the charts, and then later on they fail miserably in their trades and stop going for such coincidences. So ultimately, we need to understand the gap moves, they do it on Sunday or Monday morning during the start of the Japanese session, mainly when there are unfavorable positions. There are days wherein they just opened flat. So there is no thumb rule that they have to necessarily open with a gap. And hence, I always suggest that if you are trying to hold the position to the next week, you hedge the position and hold it, or keep the hedge order to limit the risk, because simply holding the position might create lot of detrimental effect to your equity. So the reason for such gap opening is only when the traders hold plenty of unfavorable positions that players make such gap openings. Otherwise, they simply open flat with 2-3 pips net change from that of Friday close. Once you look into that of the net change, you can understand from that of the previous day close how much of pips they have just made the move. See, now yesterday's close level, now Euro has gained only about 14 pips. USDN has dropped about 11 pips. So this sort of net changes will be seen in a normal day. But during that of the gap time, the Friday closing and Monday opening, the gap time might show a bigger move, like 70 pips or 50 pips, net change, etc. And there is no need, a thumb rule, that they have to fill the gap, and they can always make the move in line with that on that particular day. Suppose they open with 50 pips or 70 pips net change, and on this Monday, they opened in the case of USDN, sorry, USD, GBP, they opened it with about 130 pips net change level and continued with that of 160 pips, and then they were simply holding it near that of the low 1.20 area. And then once the traders think that, okay, GBP will be a free sell for every rise, and many were telling that GBP should sell when May, after the speech of May, etc. But ultimately, they were seen that even though the speech has not given any significant clue, still they gained the levels in the case of GBP. So this is how they make you to anticipate and then make the move against your expectations. Then why you call it as market follows technicals and fundamentals? Then sure. After rising the USD and today towards the US session close, they might drop again as it happened yesterday. See, that is what, no, if you try to correlate with it of the previous day, etc., you might get disappointed. You have to find out what is going to be the type of moves they are going to do it next week, and then try to trade accordingly, rather than simply deriving some logical uh, reason based on the logical appearance. We should not think that like last week or like yesterday they would make the moves. And I have been telling many times here, the players do not make hat tricks. That means they don't make similar moves for more than 2 times. If we have a take profit order set for the trade, at what point should we change it? If the market looks like it wants to keep moving. Okay, when you have a take profit order and also a trailing stop, the market has not filled your trailing stop, and it is not making a small dip of even 15 pips. It indicates that it is intentional move. And once that move is determined as an intentional move, then that potency is it can rise up to about 150 pips. Then immediately you move your take profit order to 115 pips net change level. See, now you find that euro high, euro current level is 15 pips net change level. So another 135 pips above the current level, you can keep the take profit order and they will fill it. If they are not filled, your trailing stop in 2 hours, that means they are making intentional move. They are not making any big drop. So they are making an intentional move on the upside. So you will be able to really capture the maximum profit. So that is why your trading strategy should be always correlated to the type of moves you observe it. And also your trade will give you very clearly what type of moves they are doing it. And then he is addressing Brent. You can manually adjust away your take profit order when your position is making profit, when it is continuously moving in your favor. But be sure to activate your trailing stop order at least 20-30 pips. Yes. And you can either manually move your take profit order or you can just make it automatic also, provided you keep about 30 pips away from the other market. You can make it as a trailing stop, trailing take profit order also. Those provisions are available in MetaTrading platform, and you have to study the platform features and then try to apply those orders properly. Is there any other question, please? So the expected forecast, expected market move, they are expected to make the nominal slide during the late Japanese session. Now the late Japanese session will start by 6 GMT and then start gaining the levels. And then during the European session, they are expected to make a very quick rise. Probably they may say in anticipation of Trump's oath-taking ceremony, and then subsequently, slowly they will make the moves here. And probably in line with it of just to create the US dollar sentiment, they could weaken US dollar and slowly gain the levels in the case of euro and GBP. And you know that yesterday, euro, they made the quick gain and then start making the slide after that of the ECB press conference. And again, they gained the levels. So it is not that based on the fundamental they have to make the moves. They will make the market appear moving in line with the fundamentals and simply reverse it and say that, no, we have got another event and the market is trying to track it. Already the previous event is discounted and the new event the market is going to track. Then the levels you can see, these are all mathematically derived levels, based on the limitations. See how you can find that players are really obeying all those levels, the mathematically derived levels, and trying to make the moves. So if you follow it carefully, you don't require any of those technicals and fundamentals. You can simply use the live market code page and also the net change level and just note down the initial lows and the highs and continue to track the players and trade in line with them. Whenever they want to rise, you take a buy and book profit. Whenever they want to make a drop, you can just sell and book profit. That way, you can try to trade along with them. Trading against them is very difficult because they have got the money power. And they will always induce the traders to trade against their intentions. That is how they create the market sentiment. So don't be moved with that of the sentiment what they create. Read their intentions and trade along with them. USD is at the midway. Still we wait 6 GMT to make a decision. Yes. Always they make the moves in the majors during the early and the late sessions. Wait for 6 GMT, 6 to 7:30 GMT move, and then try to take the positions. These are all the recommended trades. They could make a downward stop and during the gap time in the case of USDN, or during the early part of the US European session. At the time, try to take a buy. In the case of USDN, what they do is they make the move in line with that of Euro and GBP as the US dollar weakening or US dollar strengthening move. So they could gain the level in the case of Euro and GBP. At that time, USDN might make a dip on the downside as the US dollar weakening move. And then they start holding Euro and GBP, start gaining the levels in the case of USDN. So with the help of the live market code page, you can easily identify by looking at the net changes. Only then you will be able to appropriately trade in USDN. And by simply looking at that of the US dollar sentiment move or US dollar weakening sentiment move, then you might be trapped in USDN. So always look for the contrarian move and then try to take the positions on the USDN and the N crosses. You'll be able to really make good profit. Will Euro USD be very volatile today? Euro might make a small dip, and if needed, they may make a downward stop and then start gaining the level. Not a big volatile move. And today the players are showing negative net change in the denominator currencies. That is what they are making the US dollar weakening move at the moment. And it is not going to continue like that. And suddenly they will make the contrarian move. As I explained to you, they will gain the levels. US dollar weakening move. Then they will gain the levels in the case of Euro and GBP, make a drop in the case of USDN and USDCHO as the US dollar weakening move. And then start gaining the levels in the case of denominator currencies, holding high Euro and GBP. That is how they will bring in the contrarian move. Okay, no more questions? So I take this opportunity to thank Ph.D. for the facilities provided to present the webinar. I'll come back on Monday and give you yet another forecast for the next week, all the session-wise forecast for the next week, and you can try to follow that and trade wisely using your common sense. Wish you all the best in your trades and also weekend. See you on Monday.